Hello and welcome to Pro Trader Strategies Market Commentary for Monday, January the 7th. My name is Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. Not a whole lot across the pond. We did get German factory orders. We've been seeing some of these economic data points across the pond slowing down a little bit. Most of the regions in Europe are still expanding. French and Italian, we've been seeing contracting a little bit. German factory orders coming in at a negative 1%, expected to be a negative 0.2%. So worse than expected there, no revision to the previous number. Retail sales, though, flipped on that side, and German retail sales came in at 1.4%, expected to be 0.4%, and they revised last month's number up from the negative 0.3% to a positive 0.1%. So good economic data there on the retail sales. That's good to see. Factory orders pulling back a little bit might be a precursor to that just being coming out of the holiday season, but good to see the retail sales ahead of that season, ahead of the holiday season, doing quite well. Here in the United States, we got the ISM, Institute for Supply Management, non-manufacturing PMI, which is Purchasing Managers Index. Purchasing Managers Index is the purchasing manager's outlook on orders and the overall economic outlook going forward. That being said, it is a very nice number for forward-looking guidance because the factory or the manufacturer's purchasing manager is trying to discern what he thinks the economy or what the orders are looking for and how they're going to fulfill those orders going forward. So anything above 50 is expansion. We got above 50, albeit not quite as good as the economic data point we are looking for. And that's about it for the economic data. It is a Monday. Generally speaking, we don't even really get any economic data, so it was nice to see something there anyway. On to the overall markets, we've got crude oil trying to test that $50 mark that I've been talking about, it getting back into that mid-50s, if you will. I think that that's going to be the sweet spot, especially heading into the summer season. So market is moving in the direction I kind of was anticipating. I expect it to get up into the 50s this week and then the mid 50s, like I said, later on, maybe this week. That's what I was talking about last week anyway. All right, gold futures still trying to test that 13 handle. You know, we did it Friday. Today went up there to try and test it, came up just short. Market really started losing some momentum to the upside. I think that we're going to start seeing more a loss of momentum to the upside in gold as the equities start to rebound and move back to their points of control that I've been talking about. So without further ado, let's go start moving over to the equities. Bonds still continuing to roll over. As I talked about, they were a little overextended to the upside. I thought they were extended to the downside at one point. Now they got extended to the upside. Right in between there is the sweet spot. And same thing happened with the equities. I just didn't expect that the equities were going to go to their low extreme and the bonds going to their upper extreme, which is, I thought that they would stay within the value area, which they didn't. You know, of course, the markets have to test those extremes. So I was very aware of that. And as soon as it broke out of my range that I expected, I pulled the ripcord on every trade that I had, if you remember. And I've started slowly adding back in trades and getting back into the swing of things. But with that being said, bonds still a little high, testing this value area high, acting as support as it did again on Friday. So the market is trying to hold on to that area. All right, the VIX is slightly higher on the day. We got a mixed bag, at least last I checked, with the Dow Jones was in negative territory. It looks like it's just now going into positive territory. So market's starting to push. Again, we talked about all of this overhead resistance areas coming very close to one another. So it's going to seem like it's a very wide swath, I should say, for this resistance, overhead resistance area. So Dow Jones really trying to peel through that today, up almost 50 points on the day. And then we go over and look at the NASDAQ. It's up quite nicely as well. Again, we talked about this with the value area low, lining up with the Fibonacci retracement. That is going to act as a big line of resistance. It also happened to line up with, as a support here, it's going to act as the resistance back here where we're trying to retrace through this. Now, a big push late in the day would be nice, but we've been seeing this real weakness heading into the last hour or two of the day, which I don't really want to see again anymore because that is a very bearish undertone to it. We'd like to see a little bit of a pop, maybe another 20 points higher in the NASDAQ for a finish would be very nice for the bulls anyway. E-mini S&Ps have pushed through that Fibonacci area that we've been talking about. The value area low for the E-mini S&Ps is quite a bit higher, but you can see it did act as support as well. But that's the target I'm looking for the E-mini S&Ps, at least this week, to get up to that area, hopefully break through it and get back to that point of control where the most time and volume has been spent right here around that 2717 area. And then we look at the daily chart of the E-mini S&Ps. You can see we gapped higher on the open, and then the overall inventory kind of being long from leftover from Friday. We started seeing some of that covering. Coming into the day with the economic data being not too bad, especially across the pond out of Germany, the market has really started rebounding quite nicely. And as you can see, we are near the highs of the day. And without further ado, let's talk about a couple of trades that I've done or that I've taken off. Now, Friday, I talked about this with Facebook. I was working this trade to get out of it in Facebook, excuse me, and I ended up getting out of it late in the day. I had a working order in there and it got hit. So in those, I had on the January, if you remember, I was short the 123 puts in there for about $1.22, I think it was, and I was able to get out of that for 63 cents. So out of the Facebook, that trade executed on Friday, and then I just want to double check my number on that just to make sure that that was the right pricing for that. I'm doing that off the top of my head real quick. But yeah, so I sold those 123 puts for $1.20 and bought them back for 63 cents. That worked out quite nicely. And then finally what we were doing was with Amazon. I told you I was squeezing this one out a little bit longer. Was well past the 50% of my max profit, especially on Friday. I was past that max profit. I was looking to cover it and then really got ready to pull the trigger on it and decided to hold off because the volatility when you're heading into the weekends really has a tendency to hold on to those markets heading into that weekend because nobody knows really what happens over the weekend, right? So volatility has a tendency to hold on in going into the weekend. So I got that volatility coming out a little bit and the extra few days of theta decay, right? So that worked out quite nicely. It saved me about 25 cents, as a matter of fact, 20 to 25 cents by holding it out over the weekend. So I'm happy about that. And I had on the January, and I was short the 1,200 puts in there that I originally sold for $2.43. I was able to buy those back this morning for 65 cents. Put that order in before the open as a 65-cent bid. Just looking at the way the market was up, I thought that was a pretty good location. I was probably one of the first people to get hit on those trades. I think somebody actually paid 85 cents and maybe had a resting order left in there over the weekend. And then I got hit shortly thereafter, I believe. So I'm out of those two trades. Really don't have a whole lot going on in my portfolio. I only have a couple of things left in there. I think it's Starbucks and GDX, which I'm playing to the downside. So pretty negative delta portfolio. So I'm going to be looking to add a couple of things. I haven't done it yet today. Wanted to play out how today's set up, right? Because today is like one of those setup days. Is it going to continuation? Are we going to create a little bit of top where we have that bearish trend of lower lows, lower highs? This would be creating a lower high again. So I'm kind of waiting to see how this plays out in order to really solidify my directional assumption going forward. And that's it. Check out last Thursday's webinar. It was a really great one on poor man's covered puts, and I also did the poor man's covered call a week before that, so check that out. These are great strategies, especially in and around this area where we've had a big pullback. If you wanted to add some stocks to your portfolio, these poor man covered calls and poor man covered puts are great portfolio adjustments and use very little margin in comparison to actually going out and buying stock and all of those things, and a higher probability of success. I show you all of those traits in that webinar and give you specific rules to follow so that you're not second guessing yourself all the time. You have rules to follow in order to become mechanical. And when you're mechanical about your trading, you are going to be more confident. And that is going to be the thing that really flips the table on your trading. It'll start making everything make a little bit more sense. So check that out. I can't emphasize it enough on how I teach these and break it down so that you aren't ever second guessing strike location, when to get out, and things of that nature. Okay, so check it out at protraderstrategies.com. And if you can't take that, take it easy.